Ever heard of someone losing their bank account, not for fraud, not for missed payments, but just because the bank didn't want them anymore? Yeah, that's happening. And it's hitting headlines for a reason. This isn't just about one person. It's about whether banks can cut you off over politics, beliefs, or just bad PR. Sometimes, it's not even about breaking rules. It's about how risky you are to the bank's image. And what's going on behind the scenes. It might shock you. So stick around, because knowing how this works could actually protect your money. Quick pause. If you're into real stories where power, money, and politics collide, hit that like button and subscribe right now. It really helps the channel grow and keeps these deep dives coming. Alright, here's what happened. Donald Trump claims two major banks, JPMorgan Chase and Bank of America, rejected over $1 billion in deposits from his businesses. JPMorgan reportedly gave him 20 days to move hundreds of millions. Bank of America wouldn't even take it. Trump says he even reached out to their CEOs. Still no dice. He ended up spreading his money around smaller regional banks, $10 million here, $10 million there, just to park it somewhere. Whether you support Trump or not, that's a huge red flag. So was this about politics? Or were the banks just avoiding a client with baggage? The Biden administration sees it as political discrimination. They're calling it deep banking. And now, there's an executive order in the works to stop it. If signed, banks couldn't deny service purely based on political views. This isn't just about Trump, either. Conservative groups, religious organizations, even crypto companies have reported being shut out by banks. Under the new order, banks could be fined, forced to change internal rules, or even see execs disciplined if political bias is found. But here's the pushback. Banks say this isn't about politics. It's about risk, reputational risk. If taking you on might spark headlines, scare shareholders, or invite regulators, you might not be worth the hassle. And let's be real, Trump's got lawsuits, bankruptcies, and now criminal convictions under his belt. From a bank's point of view, that's a lot of heat. They use what's called the headline test. If your name makes the news for the wrong reasons, you're a risk, on paper and in PR. But here's where it gets murky. These same banks, they've been fined for money laundering. They've worked with shady clients, foreign oligarchs, you name it. So why drop Trump? Critics say it's all about optics. Turning away a controversial client looks like taking a stand, even if it's selective. And that's the gray zone. When banks care more about public image than policy, ideology starts creeping in. Trump's order wants to ban that, by removing reputation as a reason to reject a customer. But that could backfire, too. What if banks need to say no to shady or dangerous clients? And this fight isn't new. Under Obama and Biden, banks were told to be cautious with industries like payday lenders, guns, and crypto. But instead of targeting bad actors, banks just avoided entire sectors. That's called de-risking. And once you start cutting off whole industries, it's a short step to cutting off people. So what does this mean for you? You might not be moving $100 million, but the principle applies. Your bank can close your account with barely any warning. Especially if you're in a high-risk industry or make transactions they don't like. That's why it's smart to have a backup account. Just in case. Keep your records clean. Respond quickly to any bank requests. And no, laws can change. If Trump's rule passes, banks may lose the power to drop customers for political reasons. But if a future administration reverses it, game over. At the end of the day, this isn't just about Trump. It's about trust in the banking system. When people think banks are playing favorites, confidence takes a hit. And when banks feel forced to take on risky clients, it messes with their stability too. This tension is only growing. And it might not stop with banks. Think insurance companies, crowdfunding, even payment apps. If one sector gets regulated for fairness, others might follow. No easy answers here. You can't shut people out of the system for their beliefs, but you also can't force banks to ignore risk. Somewhere in the middle. That's the real fight. So next time you hear someone got dropped by their bank, remember, it's rarely just one reason. Money, politics, reputation, timing, it all plays a role. And most of what really happens, you won't see it in headlines. Now I want to ask you, if your bank shut you out tomorrow, what would you do? Drop your answer in the comments. Let's start a real conversation. And if you got value from this video, like, share, and subscribe to the Untold Compass. Because the battle between your money and their power, it's only just heating up.